All right, what up, tycoons? What up, traders? We're going to give a VIX volatility index update. We're going to go over the S&P 500, the SPY, and take a look at /ES, also the S&P 500 futures. We're going to break down what trades I'm in currently and what I think of the current market landscape, right? Now, VIX is going to be the most important ticker that you could watch, honestly, especially through this bear market that we're suffering through. And I'm going to show you guys why. Okay, let's just jump straight into it. If you just Google, all right, and you come over here, what does VIX above 30% mean, right? Okay, there's two things you can look at just right here in the headlines. A VIX at 32 implies a 2% move in the S&P 500 daily over the next 30 days. That's what the VIX measures, right? It measures the volatility of the S&P 500 based on put and call option contracts that are being purchased over the next 30 days, right? Right. And the rule of 16 suggests that a VIX trading at 30 implies a 1.875% move in the S&P 500 daily over the next 30 days. Now, again, this is daily. So if you're wondering why we're able to rally 2-3% up and then reverse that completely and come back down 2% afterwards, or you're wondering why, okay, well, the market went down 2% and then we ended up closing, up 2%. It's because VIX has been trading at 30 or above. All right. So what we'll do now is we'll actually take a look at the chart. Okay. And we can see here that VIX is actually below 30, right? It hit lows of 28, 22 right now. Will VIX stay below here? I'm not sure. All right. But what I do see, okay, is that it was extremely oversold on the 1 hour chart, right? This is our relative strength index, measures the relative strength of whatever ticker you're looking at. We came down and we bounced at the 23.98 support level that I have on the VIX on the 1 hour support. Right, just because something's oversold doesn't mean it has to recover immediately. And the VIX has dropped down to levels below there many times this year already. But that's an indicator that, okay, well, the volatility index is very oversold. We could see a spike in it coming soon. Now, everything is gapping down right now. We're going to take a look at the futures and the S&P 500 index, the SPY. Microsoft and Google just had bad earnings and their stocks are down big. So what that may result in is a gap up on the VIX, and you may see VIX get back above 30. Now, 30 is all the way up here on the VIX. Okay, so we could come up here, come back down, all right, and just trade in between this wedge, right? What we have right here is known as a falling wedge, a descending wedge, whatever you want to call it. It's a bullish pattern, actually. And so what happens is, if we come up here, pull back down and get our breakout, okay, that's going to put VIX back above 30. All right. And that's what's going to really cause the next level of pain in the market. We have the FOMC meeting coming up soon in November. It's the end of October right now. So, it wouldn't surprise me for the VIX to keep rising and going up, right? AKA volatility. And once you know that VIX is above 30, then you can really expect to see those 2% moves on the S&P 500 daily. If we look at the SPY index right now, okay, look at the move today, 1.60%. If VIX was back above 30, this would have been a 2% day easy on the S&P 500, right? But instead, we didn't see that, and it only rallied about 1.60%. Now I'm actually in some I'm shorting the market right now. Okay, we can go into the options trading tycoons Discord and we can look at my call out specifically. And I'm playing it very light. All right, guys. This is a very tough market to trade in. I got the SPY 375 puts, or I'm sorry, 374 puts that expire November 9th. Right. So I got plenty of time on them. It's got like 2 weeks till they expire. So I'm not looking for necessarily SPY to come down all the way to 374. If it does, that's money in the bank. But there's too many earnings going around, right? And luckily for me, for my contracts, Google, Microsoft missed, and that's dragging down the market, right? We can see after our SPY is down. If we look at /ES, before we do that, actually, I want to highlight. So we highlighted how the 1 hour chart had a descending wedge, which is a bullish pattern on the VIX. We have a rising wedge, which is a bearish pattern on the SPY, on the S&P 500 index. Also very, very overbought today, on the 1 hour chart. We look at the RSI, it was very overbought, trading above 70. All right, what I want to do is actually pull up the 4-hour chart. And this is something that I posted for all the members in the Discord. I said, hey, be cautious, take some profits right now because of this, right? And we'll go ahead and look at that post in the Tycoon analysis of the OTT Discord. And, I basically just went over here. I said, calls have been paying well lately. With that in mind, remember to take profits or have some risk management. As we see here on the SPY 4-hour chart, anytime it has been overbought on the RSI, it has not lasted there. This pattern may repeat itself and play out later this week, or we could break that pattern it's been following recently and just continue heading higher. All right. And this is the pattern that I spoke of. All right. RSI over 70 right here. All right. It stays up here. And then eventually we come down, make new lows. RSI over 70 right here, overbought. Okay. Eventually we come down, make new lows, right? Overbought right here. We come down, we make new lows. Overbought right here, and we're starting to pull back. Now, we could potentially make new lows. We'd have to break 349 to do so. And I'm not, saying that the market is definitely going to make new lows right now, but these earnings catalysts are really a big deal, and they could be the start of this earnings compression that you've been hearing from many analysts throughout the market, what they've been preaching about, right? And so I posted this at 319. This was before market closed. So if you want to get access to these intraday updates, on my analysis on what, the other admin members, right? Because it's not just me, you get a whole package. There's 4 other admins in there that are posting their analysis and their trades. We've been killing it and, making lots of money here recently. So, if you want to join that, the link is in the description down below. Use the code Zachly, like the channel name ZachlyTrades, and you can get yourself a discount on your membership. Now, let's go ahead and jump into the futures, okay, /ES. And show you guys what we're looking at on the futures. They already gapped down. Okay, if we go down to the 1-hour chart again, all right, these are the key levels that I'm watching. Okay, let's actually go down to the 5-minute. Okay, so this is what I mean by the gap down. Here's 4 p.m. Boom, 6 p.m. comes and they've gapped down. They're already going down. The key levels that we need to hold and maintain if we want to see a bounce, all right, is going to be this right here, 38, 21, 53. And what that is that's the 61.8% retracement. It's known as the golden ratio, right? So we took this move up here, all right, and nothing moves straight up or straight down. So a lot of times you see a retracement just to continue going higher. So if somehow the futures hold 38, 21, 53, then there's a possibility we could go back up and make a higher high. But with all of those negative earnings catalysts, if we break 38.21, okay, that's going to be a very critical level. And we're going to come back down into here, test this demand zone that we have at about 38.10. And if we break through there, okay, all I have left is a very small demand zone right at about, 37.95 on the futures. Okay. If we don't see any buyers stepping in here, all right, and there's no buying activity, no demand coming through the market, 37.89 is going to be our low, and that's going to be 100% retracement of this move, and that's going to set up a cup. Okay, now that can turn into a cup and handle possibly, right? So let's say we come down here, we bounce off of this level on the futures, we get a short-term rally, and then we just turn this demand zone right here into supply. So if we come down through here, all right, and form this cup, let me draw it for you guys again, and then we rally back up here and this demand zone turns into overhead supply, you're going to see us drop back down, test this level, and possibly form that inverse cup and handle right there, and that would drive the market even lower. Okay, so that's it for today's video. Hopefully you enjoyed it. Make sure to smash the like button and subscribe to the channel. Keep in mind, I do viewer requests every single week. So if you have a stock, you have a cryptocurrency, you have a strategy or tutorial you would like me to make for you, let me know in the comments below, and I'll be happy to do it for you as soon as I can.